I'm speaking with David Chan, Portfolio Manager, Private Equity at MLC Asset Management. David, first of all, thank you very much for participating in the Inside Networks Equities and Growth Symposium 2025.
Thanks, James. Thanks for having me.
It's a great pleasure to have you here, David. What makes private equity a compelling part of a diversified portfolio today, especially compared to listed small caps?
Yeah, the opportunity set in private markets is just so much larger than in public markets. It's nearly 7 or 8 times larger. And so if you want to be in the most attractive, largest markets and really back the newest businesses that are adopting leading technology like AI, then private markets are the place to be.
How should advisors think about the opportunity set in private markets right now? Where are you seeing the most attractive themes?
Yeah, we're seeing it across the board. I mean, in AI and technology, which are leveraged by traditional businesses to improve productivity and reduce their labor costs. In healthcare, particularly with wellness and the thematic of the aging population really wanting to look after themselves and live a longer, fuller life and willing to pay for better quality healthcare and other consumable products around that. As well as in the thematic around ESG and the environment, where there's a strong ROI of having IoT devices, for example, that can make businesses more efficient and be able to conserve energy, which is an increasing cost for most businesses.
In your experience, what role does operational improvement play in driving the returns from private equity investments?
Yeah, I think private equity has always had this poor perception that it's a leverage game. In the mid-market, operational value add has always been 60-70% of the total value creation. And I think going forward, you'll see that across the board, even for the large caps, if they want to add value, it really has to be operational value. The days of leveraging up a company and being able to generate good returns are over.
What kind of time frame is a typical involvement for MLC Asset Management in a private equity investment?
We like shorter holds, which are typically kind of 5 to 6 years. Across the industry, holds are getting typically longer, around the 7 to 10 year mark. But in our case, we want to see a private equity manager go in, really transform a business, make it best in class. And when they've done that work, to exit the company for a strong valuation.
With valuation gaps between private and public markets, how are you approaching deployment and due diligence?
Yeah, I think the markets evolve so that due diligence periods have elongated, which really gives us a lot of time to understand the management teams and the business models of the best businesses we want to invest in. In terms of deployment, we want to have steady deployment across the capital cycle, while at times we will want to lean into particular sectors or geographies or industries. Having that diversification across vintage year is really what protects you, both in terms of bull and bear markets.
You mentioned some themes before. How is MLC using the megatrends like AI, health and sustainability to build long-term value across its private equity portfolios?
Yeah, at the heart of it, James, we're really about building sustainable business models and great businesses that are going to last generations. And so incorporating those thematics within our own portfolio, having the right ESG reporting, the right diversity within the group, and the right environmental considerations, as well as leveraging AI, means that business model is less likely to be disrupted in the future. And it also means that we're likely to be able to sell this asset at a premium, right? And you've seen some of the valuations in AI over time in the last 2 years. You can really generate some great returns if you're able to incorporate some of these thematics.
David, in your view, is private equity still sitting there as an alternative asset class, or should advisors and end clients really consider it just an extension of their equities investment?
Yeah, I think the key consideration there is illiquidity and how much illiquidity the client can tolerate. But as you've seen from the biggest endowments and pension funds globally, as well as the sovereign wealth funds, they're allocating 30, 40, 50% to private equity, which shows the attractiveness of that asset class and how they really see equities as one bucket, of which most of the opportunity set is in the private markets part of that bucket. And so, yes, I definitely agree that there's a strong case and a strong opportunity set that everyone should be taking advantage of in private markets.
David Chan, Portfolio Manager in the private equity team at MLC Asset Management. Thank you very much for your time today.
Thank you so much, James.